It started with silence. Not the kind of silence you find in a library, but the terrifying, heavy silence of a locked gate on a Tuesday morning. On September 10, 2025, thousands of employees at Tricolor Auto Holdings arrived at work to find the doors chained shut. There was no warning, no emails, just a piece of paper taped to the glass and security guards telling them to go home. Inside those empty showrooms, beneath the polished hoods of thousands of SUVs that nobody could afford, lay the smoking gun of the greatest financial crime of our decade. You see, for the last 3 years, the mainstream media has been distracting you with headlines about inflation and interest rates. They told you the economy was cooling. They told you a soft landing was imminent. They lied. While you were watching the stock market, a massive, cancerous tumor was growing in the dark corners of the American financial system. It wasn't in the banks, you know. It wasn't in the housing market. It was parked in the driveway of millions of American homes. We are talking about a $1.2 trillion lie, a fraud so complex, yet so stupidly simple, that it fooled the smartest risk managers at Morgan, Barclays, and Fifth Third Bank. It's called the shadow ledger, and unlike the official books that regulators see, the ones that say everything is fine, this hidden ledger tells the true story of an economy that has been dead for months, walking around like a zombie fueled by fake credit. Today, we are not just going to explain why the used car market collapsed in November 2025. We are going to open the books. We are going to show you the exact mechanism of the double pledge fraud that brought down Tricolor. We will expose the mathematical trap that has enslaved 28% of American drivers in a cycle of debt they can never escape. And we will show you why this isn't just about cars. It's about the plumbing of the entire global financial system, and why the water is about to stop running. Narrative deep dive. To understand this crime, you have to understand the weapon, the car. For decades, the automobile was a symbol of freedom. In 2025, it became a financial instrument of destruction. The story begins with a specific number, $6,754. That is the average amount of negative equity that Americans are rolling over into new loans today. It means that before you even turn the key in the ignition, you are already nearly $7,000 underwater. You are paying interest on a ghost on a car you don't even own anymore. But how did we get here? How did we reach a point where trading in a car destroys your net worth? To answer that, we have to look at who is actually lending the money. It's not your friendly neighborhood bank anymore. It's the shadow banks. These are unregulated financial institutions that operate in the dark, without the safety nets or the oversight of traditional banks. They don't hold deposits. They don't answer to the FDIC. They live on the edge, borrowing money from Wall Street to lend to you at predatory rates. And in their desperation to keep the machine running, they started cooking the books. The connection Tricolor Auto Holdings was supposed to be a success story. They claimed to serve the underserved. They gave loans to people with no credit, undocumented immigrants, the working poor. On the surface, it looked like charity. In the shadow ledger, it was a Ponzi scheme. When Fifth Third Bank revealed a potential $200 million loss due to alleged fraudulent activity, the dominoes started falling. The allegation? Double pledging. Imagine you have one car. You use that car as collateral to borrow money from Bank A. Then, you take the exact same car and secretly use it as collateral to borrow money from Bank B. You have now sold the same asset twice. You have created money out of thin air. Now, multiply that by tens of thousands of cars and billions of dollars. That is what was happening. The system was flush with cash that didn't exist, backed by cars that were worth half of what the loans claimed. This kind of forensic financial analysis is dangerous to produce because it goes against the official narrative. If you believe that truth is more important than comfort, and you want to support independent investigations into the dark side of the economy, make sure to hit the like button and subscribe to The Hidden Ledger. It is the only way we can keep opening these files and showing you what they done. Want you to see. Now, let's look at the mechanism of the machine itself. Because to steal $1 trillion, you need more than just a few lies. You need a system designed to process them. The term shadow banking sounds like the plot of a spy novel, but the reality is far more terrifying because it is so mundane. Shadow banks are simply companies that act like banks. They lend money, but they don't follow the rules of banks. In 2009, traditional banks originated 60% of all auto loans. They were cautious. They checked your income. They cared if you could pay them back. By 2025, that number flipped. Today, 60% of the market is controlled by finance companies, the shadow banks. Why does this shift matter? Because shadow banks run on a different fuel. A normal bank lends you money from its customers' deposits. A shadow bank doesn't have deposits. It relies on something called warehouse lending. Basically, they have a giant credit card provided by Wall Street titans like Wells Fargo or Citigroup. They use this credit line to buy your car loan, bundle it with thousands of others, and sell it to investors as a bond. It's a factory line. The raw material is your debt, and the product is a security sold to pension funds. But here is the glitch in the matrix. For this factory to stay open, the loans must keep flowing. If they stop lending, they can't pay back their own warehouse lines, and they go bankrupt instantly. This creates a perverse incentive. They must lend money, even to people they know can't pay it back. They must inflate the value of the cars to make the loans look bigger and better for the investors. This brings us back to the double pledge. In a transparent system, it would be impossible to use the same loan as collateral for two different banks. But the shadow banking world is opaque. It's a mess of spreadsheets and private data tapes. The executives at Tricolor realized something chilling. Nobody was checking the VIN numbers across different banks. JP Morgan checked their own list. Barclays checked theirs. But nobody compared the lists. So, the shadow ledger was born. In the official books, Tricolor showed a healthy portfolio of high-interest loans, performing reasonably well. In the shadow ledger, the real books, they were insolvent. They were shuffling cash from one pile to another to hide the holes. They were taking a loan for a 2020 Ford F-150, pledging it to Bank A to get cash, and then pledging the same truck to Bank B to pay the interest on the debt to Bank A. It was a classic check-kiting scheme, but done with industrial scale and sophistication. This is where the churn comes in. You might think that when a borrower defaults on a car loan, the lender loses money. In the twisted logic of the shadow ledger, a default is sometimes more profitable than a payment. Companies like Credit Acceptance Corporation have mastered this dark art. They sell a car for $10,000 that is only worth $5,000. They take a $2,000 down payment. The car breaks down, or the payments become too high, and the borrower defaults. The company repossesses the car, keeps the down payment, and puts the car back on the lot to sell it to the next victim. They don't sell cars. They sell the illusion of transportation to extract down payments. The car is just the bait. And in 2025, with car prices finally crashing from their pandemic highs, the bait lost its value. The collateral that backed billions of dollars in shadow bank loans depreciated faster than anyone predicted. The loan-to-value ratios exploded. Suddenly, the banks on Wall Street looked at their shadow banking partners and realized the collateral was garbage. When Fifth Third Bank sounded the alarm in September 2025, it wasn't just about Tricolor. It was a signal flare. It meant that the auditors were finally looking at the VIN numbers, and what they found was a hollow shell. The assets listed on the balance sheets were phantom assets. The money was gone. But the victims of this fraud aren't just the big banks. The banks will write off the losses and get a tax break. The real victims are the families caught in the gears of this machine. The people who signed the papers not realizing they were signing away their financial future. Let us zoom in from the skyscrapers of Wall Street to the kitchen table of an average American family in November 2025. Let us talk about John. John needs a car to get to work. His old car died, and he still owed $4,000 on it. He goes to a dealership that promises credit amnesia. They don't care about his past. They sell him a used SUV for $25,000, but they also roll in his old debt. Now his loan is $29,000. The interest rate? 22%. The term? 84 months. 7 years. John drives off the lot. 2 years later, the market corrects. The SUV is now worth $12,000, but because of the predatory interest rate, John still owes $26,000. He is trapped. He cannot sell the car. He cannot trade it in without coming up with $14,000 in cash, which he doesn't have. He is a prisoner in his own vehicle. This is the negative equity crisis. The data from the third quarter of 2025 is apocalyptic. 28.1% of all trade-ins are underwater. This is a record. And it's not just a few $100. The average is $6,754. This is money that simply evaporated. It is wealth destruction on a national scale. The shadow banks know this. In fact, their algorithms predict exactly when John will fail. They use surveillance pricing and advanced AI to determine the maximum monthly payment they can squeeze out of John before he breaks. They install GPS trackers and remote kill switches in the cars. If John misses a payment by 3 days, his car won't start on Monday morning. He can't get to work. He gets fired. He defaults. The repo truck comes that night. This isn't a bug in the system. It is a feature. The shadow ledger depends on this churn. But in late 2025, something changed. The consumer broke. The excess savings from the pandemic are long gone. Credit card delinquencies have surpassed the 2008 highs. People stopped paying. And because the cars are now worth less than the loans, the recovery rate for the lenders has collapsed. When a bank repossesses a car, they sell it at auction. In 2022, they might have recovered 90% of the loan value. In November 2025, they are recovering 40%. That's 60% gap. That is the hole in the balance sheet. That is the missing money in the shadow ledger. And this is where the fraud becomes necessary for survival. If Tricolor or any other shadow bank admitted the true value of their assets, they would be insolvent instantly. So they lie. They extend and pretend. They offer John a loan extension, adding months to the end of his term, just to mark the loan as current instead of delinquent. They hide the rot. But you cannot hide reality forever. The sheer volume of defaults in late 2025 overwhelmed the accounting tricks. The repo lots are full. You can see them from satellite imagery. Stadium parking lots filled with repossessed cars that nobody is buying. The supply of used cars is skyrocketing, crashing prices further, which creates more negative equity, which causes more defaults. It is a death spiral. The collapse of Tricolor was just the first body to float to the surface. The Department of Justice is now swarming the offices of other lenders. Rumors are swirling about other major players in the subprime space. The entire industry is holding its breath, waiting for the next shoe to drop. And the scariest part, the banks that funded this madness are the same ones that hold your savings account. They thought they had insulated themselves by using shadow banks as middlemen, but the contagion is traveling up the chain. This brings us to the final, terrifying realization. You might be thinking, I don't have a subprime car loan, so this doesn't affect me. You would be wrong. This is not just a car problem. This is a liquidity problem. And liquidity is the oxygen of the economy. The global financial system runs on collateral. Banks lend to each other overnight in the repo market repurchase agreements. To borrow cash, they have to put up safe assets as collateral. Usually, this is treasury bonds. But often, it is high-quality asset-backed securities bundles of loans, including auto loans. When the news of the Tricolor fraud broke, when it was revealed that the same collateral was being pledged to multiple banks, trust evaporated. In the banking world, trust is the only currency that matters. If a bank cannot be 100% sure that the collateral you are offering is real, they will not lend you a dime. We are seeing signs of a freeze in the repo market similar to what happened in September 2019. But worse, the reserves in the banking system are dropping. The velocity of money is stalling. When banks stop trusting each other's collateral, they stop lending to everyone. They stop lending to small businesses. They stop issuing mortgages. They stop increasing credit card limits. The economy grinds to a halt. The collapse of the auto market is the catalyst for a credit crunch that will define 2026. We are looking at a scenario where trillions of dollars in phantom wealth, paper gains on cars and homes are erased in months. The shadow ledger is being forced open, and the numbers inside are red. The Federal Reserve is trapped. If they lower interest rates to save the auto market, they risk reigniting inflation. If they keep rates high, the shadow banking sector implodes, taking the regional banks with it. There is no good option. The fraud at Tricolor is not an isolated incident. It is a symptom of a system that has incentivized reckless gambling with other people's money. As we move deeper into November 2025, watch the headlines closely. Watch for technical glitches at banks. Watch for unexpected delays in loan approvals. These are the tremors before the earthquake. The car in your driveway is no longer just a machine. It is a depreciating asset in a collapsing market, anchored to a debt that can never be repaid. The shadow ledger has been exposed. The question now is not if the crash will happen, but how much of your wealth will be dragged down with it. We will continue to track the liquidation of Tricolor and the spreading contagion in the repo market. This story is developing faster than the mainstream news can cover it. If you want to stay ahead of the collapse and understand the mechanics of the money vanishing from your pockets, you need to be here. Click that subscribe button, turn on notifications, and share this video with anyone who thinks the economy is fine. They need to see the ledger. I'm investigating the next chapter of this fraud right now, and you won't believe who is involved. Until then, keep your eyes on the numbers, not the narratives.